Now we have our next session, which I'm sure that a lot of you are waiting for, Dr. Tan's live session. So before we go into it, please place your question in this Q&A box and we will address your questions accordingly. So don't miss this rare opportunity to learn from an Asia investment guru with over 45 years of experience in the fine-tuning of value investing and has successfully weathered through many major financial crises. Ladies and gentlemen, please welcome Dr. Tan.
Hi, good morning. I hope all are well. This is a very exciting period. This is the first time we ever experienced that you not only have to take care of yourself, you have to take care of other people. Wearing masks is to take care of yourself and other people. Now, let me go straight. I think, as you're aware, we are launching 3 products. These 3 products are in the growth region, and at the same time, we are investing with responsible and sustainable strategies, which will help you to diversify and grow your wealth. As you can see, uh, actually, 2020 is quite a difficult year, but because of the willingness of people to stimulate, 2021 economy, although not as ideal as they earlier anticipated, but still quite a good, good growth. Now we are coming to an end 2021. You notice that ASEAN will continue to grow, uh, which is a very good thing. So that's the main reason why one of the funds is to invest in ASEAN. Greater China also will continue to grow. The other one is that we also feel that investing in ESG company is good in the long run. So that's the reason why you notice that we are launching these 3 products in the growth region with a responsible and sustainable strategy. We also now let's take a look at some of the risks we are facing now before we go into what are we bullish on in various sector. Now you can see the economic growth rate uh, is good for 2022 uh, uh, compare with 2021, ASEAN particularly, but most country also growing. You can see. Next, let's look into the key risks of 2022 before we give our view on several sector that we like, and then which you can also make your own research to look into it. First risk is that you notice that U.S. interest rate has been very low compared with the history. Although recently it has gone up slightly, but it is still very low. Very low means if the interest rate increase, if you are having a housing loan, your burden will be very heavy. And normally, historically, when the interest rate go up, the market normally will suffer. Next, as you can see, the 10-year treasury bill is only 1.5%. In fact, not too long ago, it was only 1.2, which is very low. That's why one of the statement I make was that, yeah, your interest rate is so low, so you need to look for other alternative to supplement your income. Next. Now, what happened is that if anybody follow us very closely, uh, when the crisis came last year, we were very bullish. We were very bullish because if you compare with the crash that we have last year, within 5.5 weeks, the market dropped 38.4%. Dow Jones dropped 38.4%, which is the sharpest 5.5 week drop. Compare with global financial crisis, uh, it took 1 year and 5 months, and it dropped although 54%, but it is a longer period of time. So, but although you say that, uh, last year crash was 11,000 points. Global financial crisis for 1 year and 5 months, it was only 7,000 over point. So you can see last year, you can say it's really an opportunity. Yeah. Then we have this very, why are we so bullish last year? It's very simple. We feel that this crash is an opportunity. Secondly, we felt that they all the world, all the government will not do what they did in 1930. In 1930, actually, is quite bad. When the economy slowed down, they actually tightened further. Now, we definitely think that all the government will not do that. Uh, sure enough, actually, last year, every government actually stimulated the economy. As a result, the market recovery was very strong. As a result, I think last year we have done well, as you can see. Now we are coming to this stage. Your market is high, your interest rate is low, your inflation is there, so there's some risk there. So how do we handle 2022? Next, here you can see we earlier last year we did say that we say when they stimulate, you may not felt the inflation, but subsequently it will happen, and that's what happening now. Inflation is coming up now, and US particularly also rising very sharply. Next, as you can see, the latest figure, inflation for USA rising very quickly. For some time, they were only at about 5%. Then not too long ago, 6.2. Now we are at 6.8. How do we handle inflation? We will discuss later. Next, home prices also rising in USA. That's also another risk you're going to face. Just in case the home prices drop, then you can also have some economic slowdown. Next, okay, it's something that we want to mention. All these major risks that we are facing now could also come in a sharp correction. We need to monitor the market closely, just in case the Fed compelled to tighten. Next, U.S. markets at all-time high is 21.5. Just to give you some indication, last night Dow Jones was actually traded at, I think Dow Jones was now 21.5% higher than the highest point last year. Well, this is quite something. Of course, the PE ratio also has gone up. But although you see 21.5 PE, but Tesla is doing historical 300 PE. And because Tesla expect very high growth, Tesla still expected to do close to 160 PE for the coming year. Apple is doing at 32 PE, Amazon is doing at 68 PE, and Facebook is a bit better at 24 PE. As you can see, their PE ratio is very high. And if you take a look at Apple, Amazon, and Facebook, they don't expect to have a very high growth. That is something that you need to watch. And if you compare with Asia shares are a bit more depressed. Alibaba and Tencent is only trading at about 18 PE. Next. Okay, China also have their fair share of problem. As you can see, Evergrande is one of the most indebted developer, and they are having a very huge debt. This is something that we also want to monitor very closely. Next. Next, if Evergrande has problem, I think Chinese economy will problem, then of course it will also affect the rest of the world. Next. Okay, this is something that we need to monitor very closely. Omicron depends on how badly it will spread, something that we also need to watch. Next. Okay, persistently high commodity price because of the stimulus. Yeah, that also is something that, but of course, rising commodity price, if you catch it earlier, you actually benefit because many of these companies has made good money, and if you buy earlier, you benefit quite a bit. Next. These are just to put up the oil prices has been quite volatile, up and down, but people who know how to uh, make use of this volatility, they may also make good money. Next. Okay, at the moment, we after going through all the potential risks, I would like to share with you what are we to do for 2022. Although we have shared with you some of our words of wisdom, but I would like to more or less uh, mention a bit. We are careful, we are cautious, but there are also company that will show rising profit, that will do well. So we will have to go after that. Despite US is very high, but there are still companies, there are still new ideas, they are still undervalued, they are still growth stock. So we will go for that. Now, what are the sector? The sector that we like will be renewable energy like solar, winds, and hydroelectric power. 5G, e-commerce, e-learning, software, cybersecurity. These are the area we're still growing. EV, electric car, their parts, and also basically their batteries. We will also look into the cyclical. One of those we like pharmaceutical, logistic, and some commodities, yeah, automotive. Uh, so one cautions is that, while you're optimistic about some of this sector, you should analyze carefully. It doesn't mean that because some of the share has gone up quite a lot, doesn't mean that if it's a solar company, you will just go and buy. If they are so overvalued, you may want to be cautious. At the same time, if those shares in between run up a lot, we will also take profits. Okay, these are the growth sector that we were actively looking into. Yeah, you can also do that. Yeah, like e-commerce, e-learning, automation, digitization, AI, renewable. Some of the property development company that has low gearing, technology, EV, yeah, software, healthcare, also pharmaceutical. These are some of the sector that we will look into them. But if the management is good, if the gearing is low, if they are able to grow, if the CEO is good, we will definitely, basically we are paid to go and look for undervalued stock.